Have you ever wondered how to get cash flow from real estate? Well, you're in the right place. Let's delve into the exciting world of real estate cash flow. This term might sound complex, but it's pretty straightforward. Cash flow is essentially the net income generated from a real estate investment. This is the amount left over after you've made your mortgage payments and covered all operating expenses. Think of it like a river. The water flowing in is your rental income, and the water flowing out represents your expenses. The water that remains in the river, that's your cash flow. It's the money that goes into your pocket at the end of the day. Having a positive cash flow means your property is generating profit, and who doesn't love a profit, right? Understanding the concept of cash flow is the first step towards making smart real estate investments. So stick around, and let's unlock the secrets to successful real estate cash flow together. Welcome to Cash Flow Zone, the channel that caters to all your business and financial needs. So be sure to hit the red subscribe button, like and share the video. Why should you care about cash flow in real estate? This question ignites a spark of curiosity, doesn't it? Well, the answer is simple yet profound. Cash flow in real estate is the lifeblood that can keep your investment journey alive and thriving. Imagine this. You've invested in a property, and every month, like clockwork, you receive income from your tenants. This is cash flow, and it's the most tangible and immediate return on your real estate investment. It's a steady stream of income that can be a safety net during market downturns. But cash flow in real estate isn't just about income. It's about creating a buffer, a kind of financial cushion that can protect you from unforeseen circumstances. Suppose your property needs urgent repairs, or perhaps the market dips, and you can't find a tenant for a few months. If you've been smart about your cash flow, you have a financial parachute that can save you from crashing. And then there's the aspect of financial freedom. Who doesn't dream about being free from the constraints of a 9-to-5 job, of having the freedom to travel, spend time with loved ones, or pursue a passion? Well, a positive cash flow from your real estate investment can make this dream a reality. It can provide you with a stable income that isn't dependent on your daily toil. Moreover, cash flow in real estate isn't just a short-term game. It's a long-term wealth-building strategy. The income generated from your properties can be reinvested into more real estate, creating a snowball effect that can lead to substantial wealth over time. It's like planting a seed that grows into a mighty tree, providing you with shade and fruit for years to come. So, why should you care about cash flow in real estate? Because it provides you with a steady income stream, a safety net during market downturns, a path to financial freedom, and a strategy for long-term wealth building. It's a key factor that can make or break your real estate investment journey. Cash flow in real estate can provide you with financial stability and wealth-building opportunities, and who wouldn't want that? So, how do you generate cash flow in real estate? That's the million-dollar question, isn't it? There are several ways to do it, and we're going to dive into a few of the most common ones. Let's start with rental income. This is perhaps the most straightforward method. You purchase a property, find tenants, and collect rent. It's a tried-and-true method that's been around for as long as property ownership itself. The key here is to find properties in desirable locations where you can charge enough rent to cover your mortgage, taxes, and maintenance costs, and still make a profit. Next up, we have real estate investment trusts, or REITs. These are companies that own or finance income-producing real estate. When you invest in a REIT, you're buying shares of a company, not a physical property. REITs are required by law to distribute at least 90% of their taxable income to shareholders, so they can be a great source of regular income. Flipping houses is another popular method. This involves buying a property at a low price, often because it's in poor condition, renovating it, and then selling it at a profit. However, this method requires a keen eye for potential, the ability to stick to a budget, and a fair bit of patience. Then there's the option of lease options. This involves leasing a property with an option to buy. You profit by charging a higher rent due to the option and by the potential sale of the property at the end of the lease. Finally, there's wholesaling. This is when you get a property under contract and then sell that contract to another investor for a fee. This method requires a good understanding of the market and a strong network of investors, but it can be a quick way to generate cash. These are just a few ways to generate cash flow from real estate, but the possibilities are endless. Remember, the best method for you will depend on your personal circumstances, your resources, and your risk tolerance. So keep exploring, keep learning, and keep aiming for that cash flow. How can you analyze the potential for cash flow in a real estate investment? Well, this is an essential question every real estate enthusiast should be asking. It's a process that involves 3 critical steps. First, you need to calculate your potential rental income. This involves looking at similar properties in the same area and finding out how much they're rented for. Remember, rental income isn't just about the monthly rent. It also includes any other income you might earn from the property, like laundry facilities, parking, or storage space. Next, you'll need to estimate your operating expenses. These are all the costs related to owning and maintaining the property. It includes things like property taxes, insurance, maintenance, and property management fees. It's important not to underestimate these costs. They can quickly add up and eat into your cash flow. Finally, you need to consider your mortgage payments. This will depend on your loan terms and interest rate. If you're unsure about this step, there are plenty of online mortgage calculators available to help you out. Once you have these three figures, rental income, operating expenses, and mortgage payments, you can calculate your potential cash flow. You simply subtract your operating expenses and mortgage payments from your rental income. If the result is a positive number, you're looking at a property with cash flow potential. If it's negative, you may need to reconsider your investment or find ways to increase your rental income or decrease your expenses. Remember, it's not enough to just look at the purchase price of a property. You need to consider the ongoing costs and the potential income it can generate. This is why analyzing cash flow potential is so important. It gives you a clearer picture of your return on investment and helps you make smarter, more informed decisions. And that's it. That's how you analyze the potential for cash flow in a real estate investment. It may seem complicated at first, but with practice, it becomes second nature. And the more you do it, the better you'll get at spotting those golden opportunities. Analyzing the cash flow potential of a property can help you make informed investment decisions. So, go ahead, take that leap, and start analyzing your potential investments today. What strategies can you use to increase cash flow? Now, that's a question many real estate enthusiasts grapple with. Well, let's dive right in. Firstly, consider increasing your rent. Yes, it might sound a bit harsh, but remember, you're running a business, not a charity. However, it's essential to approach this tactfully. You don't want to lose good tenants over a sudden, unreasonable hike in rent. Instead, make gradual increases, preferably at the end of a lease term. Always ensure your rates are competitive and reflective of the value you offer. Next, let's talk about reducing expenses. Often, property owners overlook the potential of cost cutting. Regular maintenance can prevent costly repairs down the line. Negotiating with service providers can lead to better deals. Energy efficiency upgrades can reduce utility bills. And believe it or not, even a well-landscaped property can lower insurance rates. So, look around and you might find a plethora of ways to save money. Another strategy to consider is optimizing property management. Effective property management can significantly impact your cash flow. This could mean hiring a property manager, or if you're already using one, ensuring they're performing optimally. A good property manager will fill vacancies quickly, retain tenants longer, and ensure the property remains in top-notch condition. And let's not forget about value-add strategies. This could be anything from adding amenities like a gym or laundry facilities to renovating units to attract higher-paying tenants. These improvements, while requiring upfront investment, can lead to increased rent and higher property values, which in turn boost your cash flow. Finally, consider diversifying your portfolio. Don't put all your eggs in one basket. Diversifying across various property types and locations can provide a steady income stream, even when one property underperforms. Remember, strategy is key in real estate. Each property is unique, and what works for one may not work for another. But with careful planning and smart execution, you can optimize your cash flow. Implementing these strategies can help you maximize your cash flow and increase your return on investment. So go ahead, take the plunge, and watch your cash flow grow. What are some of the risks and challenges in generating cash flow from real estate? Well, like anything worth doing, real estate cash flow isn't without its fair share of hurdles. One of these hurdles is vacancy rates. When a property sits empty, it's not bringing in any income. Instead, it's costing you in terms of upkeep and property taxes. So, in order to maintain a steady cash flow, you need to keep your property occupied as much as possible. Another challenge is maintenance costs. Whether it's a leaky roof, a faulty heating system, or a tenant who's a little too enthusiastic about DIY home improvements, maintenance costs can quickly eat into your profits. Some of these costs can be anticipated and budgeted for, but others come as unwelcome surprises. That's why it's crucial to have a good handle on the condition of your property and to set aside a portion of your income for maintenance. Next on the list is market fluctuations. The real estate market is a bit like a roller coaster. It has its ups and downs. One year you might be making a tidy profit from your rental property. The next year, market conditions could change, and you might find yourself struggling to break even. To weather these fluctuations, you need to be financially prepared and not overly reliant on your real estate income. There's also the risk of legal issues. Whether it's a dispute with a tenant, zoning changes, or new regulations, legal issues can be a serious headache and potentially cost you big. Having a good legal counsel is crucial to navigate these waters. Lastly, there's the risk of bad tenants. Tenants who don't pay rent on time, cause property damage, or are generally difficult to deal with can significantly impact your cash flow. Thorough tenant screening processes can help mitigate this risk. Being aware of these risks and challenges can help you navigate the world of real estate cash flow more successfully. Remember, knowledge is power. The more you understand the potential pitfalls, the better prepared you'll be to overcome them. How can market research help you generate cash flow from real estate? That's the question we're going to delve into in this part of our discussion. In the dynamic world of real estate, market research plays a pivotal role. It's the compass that guides investors through the vast ocean of opportunities and challenges. Now let's break down how it specifically affects cash flow in real estate. Firstly, market research helps you understand market trends. Just like the stock market, real estate markets have their ups and downs. These trends can significantly influence the profitability of your investment. An upward trend means property values are increasing, which could lead to higher rental rates and greater cash flow. On the other hand, a downward trend might require you to adapt your strategy to maintain your cash flow. Secondly, market research can help you identify profitable locations. Not all locations are created equal when it comes to real estate investing. Some areas attract higher rents, have lower vacancy rates, or offer tax incentives that can boost your cash flow. Detailed market research can unveil these lucrative locations, allowing you to invest your money where it will work hardest for you. Lastly, market research can assist you in determining competitive rental rates. Setting the right rent is a delicate balance. Charge too much, and you risk vacancies. Charge too little, and you're leaving money on the table. By researching comparable properties in your area, you can set a rent that's attractive to tenants and profitable for you. So, you see, market research isn't just about gathering data, it's about transforming that data into actionable insights and strategies. It's about understanding the market's pulse and using that knowledge to navigate your investment journey. Effective market research can give you a competitive edge and increase your chances of generating a steady cash flow. So don't neglect this crucial step in your real estate investing journey. Remember, knowledge is power, and in the world of real estate investing, it's also profit. So, to recap, how can you generate cash flow from real estate? In our journey today, we've delved into the multifaceted world of real estate cash flow. We began with understanding the concept of cash flow itself. It's the net income you get after all expenses have been deducted from your rental income. It's the lifeblood of your real estate investment. It's your ticket to financial freedom. We explored the importance of cash flow in real estate. It's not just about making money. It's about creating a sustainable, long-term income stream that can weather market fluctuations. It's about having the financial stability to make the investment decisions that are right for you. Then, we ventured into the myriad ways to generate cash flow. From renting out residential properties to investing in commercial real estate, there's a strategy to suit every investor's risk tolerance, capital, and commitment level. We also touched on the potential of real estate investment trusts, or REITs, as a less hands-on approach to generate cash flow from real estate. We discussed how to analyze cash flow potential. We learned that it's not only about the gross yield, but also about the net yield. It's about understanding the operating expenses, vacancy rates, and capital expenditure that go into maintaining a property. We delved into strategies for increasing cash flow. From optimizing your property's rental income to minimizing expenses, there are numerous ways to boost your bottom line. We also highlighted the importance of regular property maintenance and tenant retention in maximizing your cash flow. We talked about the risks and challenges in real estate cash flow. Like any investment, real estate comes with its own set of potential pitfalls. But with due diligence, careful planning, and risk mitigation strategies, these can be managed effectively. Finally, we underscored the role of market research in real estate cash flow. Understanding the local rental market, the wider economic landscape, and the future growth potential of an area is key to making informed investment decisions. With the right knowledge and strategies, you can generate a steady cash flow from your real estate investments and build your wealth over time. We made a video on how to save money. You can watch that video to learn ways or strategies you can use. To save money to buy a house or invest in real estate, the link will be in the description. Let us know in the comments what other topic you will want next. Thanks for watching today's video till the end. Click on the link below to watch more videos from Cash Flow Zone. This video is very educative and can help others. Please share, like and subscribe. Hit the bell notification so that you don't miss any one of our videos. See you in the next one.